Welcome back to the stream. Welcome back to another coffee hour. Today we got a lot of news to cover, a ton of news, and we'll be diving into a portfolio update at the very end. I'll show you guys exactly what I pretty much did to the portfolio over the last couple of days. I haven't been doing many lives last week, primarily because I've been so deep into this research on basically cover call ETF investing. So I plan to release a bunch of new videos going forward. They won't be live streams. They will be strictly, actual YouTube uploads. So I'm waiting a little bit before I release those videos. I still got to work on them, of course, and record them. But they will all be leading up to basically what I am implementing for the entire portfolio. So it will be exciting. A lot of stuff, a lot of good stuff, actually. So I'm really excited to be working on that. And hopefully it'll get finished here in the next couple of days. So what I want to do on this stream is just cover kind of all the news and everything that's been going on. Again, we're not going to be covering too much in here with probably my portfolio. Instead, we're going to be going over the news, all right, and kind of just getting our minds wrapped around what's going on in the broader market, so we can understand maybe what to buy, how to buy, or when to buy, things like that. Again, it's always good to have a bigger picture of what's going on in the total market so you can position yourself to take advantage of opportunities as they arise. And there's definitely some opportunities that have arisen, but unfortunately for me, I can't take advantage of some of these because, some of my cash is moving around in and out of accounts. So I have to wait for money to settle before I could take advantage of anything. But without further ado, guys, let's get into the stream. All right. Cool. All right. So let's get into the stream. So the biggest news so far has been about Palantir. All right. We covered this on the stream not too long ago. Hope you guys can see this because I got some feedback that my live streams were way too small. So I hope that, by me enlarging these numbers that you guys can see this. So let me know down in the chat if you guys can see this, if this is, big enough for you guys. If not, I might have to increase it and you guys have to get some glasses or something. All right. So anyways, Palantir, biggest news about Palantir happening over the last couple of days, and it's been on a downward trend. This was the Wall Street darling of yesterday, week, and now it looks like it's just trending downward. So could this be a potential buying opportunity or not, right? This is what the entire market has been asking. This is what all the YouTubers have been asking. This is pretty much what everyone in every community on investing has been asking, right? Is this a prime opportunity to buy Palantir? So a couple of thoughts. All right. These are just my thoughts. Again, not financial advice. None of this is financial advice. It's just what I'm thinking. So we see over the last 5 days, it's lost almost 30%, right? It's almost had a 30% drawdown, which is ridiculous. That is crazy. What prompted Palantir to just start dropping? In case you guys don't know, Palantir is it says it right here. Palantir Technologies is an American publicly traded company that specializes in software platforms for big data analytics, headquartered in Denver, Colorado, yada, 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 right? Basically what Palantir is, they have a software suite that they lease out to the government, to the DoD, to commercial, to companies, and it specializes in big data analytics. So you get all these really nice fancy dashboards. It helps, basically coming to decision making, which is really, really neat. But a lot of government agencies do use this. So Jeff Welch says, look at that PE ratio. Yeah, I mean, just look at the price to earnings ratio. That is ridiculous, man. That is crazy. I know we're in the chat. We're talking about the market cap eventually reaching, $1 trillion. Probably doable over the next couple of years, maybe. It depends on market sentiment and kind of my thoughts. I'll get into this in just a moment. But anyways, let me continue on before I get off track here. All right. So anyways, we're talking about Palantir Technologies and what happened. Okay. So there was something that came out not too long ago. It came out last week, and I hope you guys can see. Excuse me. I hope you guys can see this. Let me enlarge this a little bit more. But yeah, Palantir's technology stock is down 25% since its peak. Is it time to buy the dip, right? And essentially the reason why this happened, and again, all these links and everything will be down in the show notes at the end of this stream. So basically, it was a double-edged sword that happened at the same exact time, which was kind of funny. And I don't know if this was all planned or something, because it seems really odd that both of these happen at the same exact time, like within hours of each other, right? So CEO Alex Karp of Palantir planned to sell almost a billion shares. No, not a billion. I'm sorry. Almost 10 million shares of stock, liquidating all of his shares by September, right? So that would be horrible. That's, that caused investors to just stop and say, wait a minute, right? If the CEO is selling all of his shares, what does that mean? And there was a chart, I couldn't find it in time for the stream, but there was a chart basically showing that, insiders are getting out of Palantir and now retail is buying in, right? Does that mean that the company is bad, or that, it's headed for the dumps? I don't think so. But at the same time, I think that the insiders of the people, the big players for Palantir that bought a lot of the shares in the beginning, they probably did that knowing that it was going to rise. It was getting new contracts, it was making a lot of money, it was beating earnings, all this stuff, right? They were propping the stock price all the way up, and then, they're selling out, and, along with the CEO, Alex Karp, saying, yeah, I'm going to sell out of my shares too. It just spooked the market. It spooked a lot of investors. Just my opinion, of course, right? Because I don't think Palantir is a bad company. I don't know if you guys do or not, but I mean, you tell me. Let me know in the chat, or let me know in the comments. Do you guys think Palantir is a bad company? I don't. So there was also, at the same time, which was a double-edged sword, like I said, another report came out from the Department of Defense. The Secretary, Pete Hegseth, basically saying that they're going to cut military or defense spending by 8% annually over the next 5 years. I heard that number was less than 8%. I thought I saw it was like between 5%, but I guess I'm wrong. But 8% annually over the next 5 years. So that's big. That's a huge number. If those plans happen, investors fear that this could jeopardize key contributors of Palantir's growth, because Palantir is so involved with the military, is so involved with the Department of Defense and the government in general, because the government is leasing the software and they have tons and tons of contracts with Palantir. So this could be a bad thing. But I'm going to explain why I don't think that is the case, and I think this was oversold. So anyways, it could jeopardize key contributor to Palantir's growth, as a company has been a major supplier of data mining and AI systems to U.S. intelligence and defense agencies. All right, and obviously, this killed their share price, right? Dropped tremendously off of these two bits of news. But here's something interesting. So I was, looking around. I hope you guys can see this again. I got a comment, and I noticed it myself that, the words and everything on these live streams are not large enough. So hopefully this stuff will show up, easily for the eyes, especially for my phone viewers. All right. So anyways, Pentagon proposes $50 billion in annual cuts and identifies priorities to expand. All right. And this came out on the 20th. And again, all these links will be down below. The Pentagon proposed cutting 8% of its budget in each of the next 5 years, amounting to some $50 billion each year, but prioritize 17 areas, from drones to submarines and military assistance to the south border, as well as increased funding for U.S. command that focuses on China, right? So, just a little flex of information out there. There's a couple commands out there. There's CENTCOM, there's PACCOM, there's EUCOM, there's AFRICOM, and there's SOUTHCOM. But basically all these commands focus on different areas of the world. So a couple of the other commands are on the chopping block, especially in the Middle East, from one of the reports I read. But anyways, with that out of the way, these are the 17 priorities that the defense sector, or the Department of Defense Secretary, is going to be focused on, right? So they're basically cutting spending in other areas to increase spending in other areas. All right. So these are the 17 priorities for the Pentagon. There's a southwest border activities, combating all this stuff, audit, nuclearization, yada, yada, yada. Homeland missile defense, which, yeah, I have my own thoughts on that. One-way attack autonomous systems, priority critical cybersecurity. All right, I think that's a big one, right? The protection of our networks and systems in the United States. I think that's a good one to have. Core readiness, munitions, energetics, organic industrial bases. I don't even know what that means. executable Indo-PACOM, MILCOM construction. So basically anything that's going to contribute to the deterrence of China, right? To basically fight China. That's where they're going to be putting money. And then combatant command support agency funding for Indo-PACOM, NORCOM, SpaceCom, STRATCOM, CyberCom, TRANSCOM, right? And then private sector care. All right, so I know this is all like a word salad, guys. I know this is all, what does all this mean? These are places where the defense, the Department of Defense is going to be focused on. So as investors, how can we, make use of this? How can we kind of like understand this? Well, we know that the defense budget is actually going to be not increased, but these areas are going to be increased. So where does Palantir actually fit in with all this? Well, to be honest, it doesn't fit in with any of these things, which is crazy. It doesn't actually, like, they don't specifically mention AI or artificial intelligence. But if you look at Palantir as a company and Palantir as a software, it's included in all of these things, right? There's all these things, all these different sectors that the Department of Defense is going to be focusing on that Palantir can potentially be a part of, right? All right. I don't know if they are or not. You'd have to look at what their contracts are holding. Like, you'd have to look at their press releases and understand that. But Palantir is not going away. All right. Palantir is not going away. Another point of fact is that in Trump's campaign website, Trump's campaign website, in his document of what he's going to be focused on, he specifically mentions artificial intelligence. Okay. So I can't be more specific than that because I covered that in another live stream. But yes, you can check out his campaign website, and in his, his project 2024, or whatever he called it, or 2025, he specifically mentions artificial intelligence. So I think this was oversold. I still think Palantir could probably go up. Of course, not financial, not financial advice. Don't buy in now. But I think there's definitely going to be further pain for Palantir before we start to see a comeback, right? It was beaten down quite a bit. Definitely getting its butt whipped, right? Overvaluation real fast, and then it drops. Is it going to go back up? No idea. Will it reach about $70, which, talking to a few other investors, that's where they say it's probably headed. It's probably going to head to something more realistic. Like, these are realistic levels. Who knows? But for me personally, again, I wouldn't invest in the actual stock because, I'm a little more risk averse. However, there is something I am looking at doing or implementing in my portfolio, and that is a cover call strategy against Palantir, right? So using a cover call ETF, something like plty from yieldmax is what I have been thinking about doing, but I obviously don't have the money for it right now because it's waiting to be cleared from bank to brokerage. So, but if we look at, plty, if we look at plty, it's been dipping quite a bit. Could this be an opportunity to hop into it? I think it might be, and it might be something I play in the very near future. So just real quick, we'll cover this and then we'll move on. But yeah, plty, yieldmax fund. Again, I don't plan to hold these long term. These will be kind of your momentum short-term players, maybe, 3 months whenever the thesis changes, and then you collect your dividends and then you get out, right? Hopefully there's no NAV erosion while you're holding this thing, but this would be something that I'm interested in. So anyways, all right, moving on, guys. All right, so we covered all this. So there was also some other news. Apple boosts U.S. investment plans with $500 billion pledge amid Trump tariff threat. Now we gotta visit this again. All right, we gotta visit the Trump tariffs. I covered this before. Nice little pink right there. We gotta cover this again because there hasn't really been a whole lot of news concerning the tariffs, right? We understand that there's tariffs placed on China, and then China is, reciprocating that by placing tariffs on us, which is crazy. But Canada and Mexico were supposed to deploy 10,000 troops to the border in order to, stop the whole fentanyl thing and yada, yada, yada. And, we wouldn't put tariffs on there, but we're pretty much at the end of the month, and there hasn't really been any news of whether Canada and Mexico have went through with their promise. So it's quite possible that tariffs might be back on the table. And if that happens again, we can probably predict or probably surmise that the stock market is going to feel that pinch, and it's going to feel that pinch pretty bad. All right. So anyways, real quick, Apple boosts U.S. investment plans with $500 billion. Again, this is on the whole AI thesis play over the next 4 years, definitely over the next decade. Apple on Monday reaffirmed its commitment to invest hundreds of billions of dollars in the U.S. over the coming years amid pressure from President Donald Trump and the growing threat of his tariffs. The tech giant said it planned to spend $500 billion over the next 5 years in the United States, with intentions to hire 20,000 new workers and produce AI servers. The plan includes a server factory in Houston. This is interesting for me because I'm actually invested in a property in Houston, so I like to hear stuff like this. Slated to open in 2026 in Manufacturing Academy in Detroit. The company also said data centers in Arizona, California, Iowa, Nevada, North Carolina, Oregon, and Washington would see expansions from the investment plans. So really exciting stuff, especially from Apple, that they're going to be investing $500 billion. We know from the Stargate project that SoftBank, in collaboration with OpenAI, NVIDIA, Microsoft, that they're investing over $500 billion in the United States for AI as well. So this is crazy. This is a lot of money being sunk into AI. So this is why, again, looking at it from a bigger picture, I don't see Palantir going into the dumps. I don't see it going into the dumps over the long term. You have to have a longer term picture for companies like Palantir. Again, it's a tech stock. No tech stock in the last probably 8 years have ever made sense, right? Like they just never make sense. There was a period of time where all tech stocks between 2020 and 2021, where there was a lot of tech stocks making no money, but their stocks were going up like crazy. A lot of them ended up busting. But again, for something like AI, and it's a what am I trying to say? Like it is a strong focus of the current administration. I can't see Palantir going into the dumps. Like I can't see the whole AI industry going to shit, essentially is what I'm trying to say. We are bullish on the American we are bullish on the future of American innovation, and we're proud to build on our longstanding U.S. investments with this $500 billion commitment to our country's future, Cook said in a statement. Tim Cook is the CEO of Apple. And we'll keep working with people and companies across this country to help write an extraordinary new chapter in the history of American innovation. So I've always said this, and this goes again into bigger picture type of stuff. China may copy the United States. They may have their own AI version. They may have their own companies that can do things similar to American companies. But what they can't copy is American innovation. Okay, they cannot copy American innovation, which is one of the reasons why I went so heavy into a U.S. tech-focused ETF, all right, which I shared in a previous stream. But that tech-focused ETF is VGT, Vanguard's Information Tech, all right? I'm bullish on America, period, all right? And I'm bullish on American innovation and American tech companies. And that's why I sunk a huge portion of my net worth into VGT. All right. Anyways, let's keep moving. As we can see, it didn't really affect Apple. Apple's actually been the most stable over the last couple of days. Despite the rest of the market taking a dump, Apple actually has been doing pretty well out of the bunch, right? They've just been chugging along. Like I like this. I like to see things like this. So this is good. If you guys are interested, again, for anyone who might be watching who's, never saw the channel, maybe you're new to the channel, whatever, I did come out with a video, the best AI ETFs for 2025. I covered them. Video to check out if you guys are interested. All right, so let's hop into the broader market, see what's been going on over these last couple of days. Yesterday or today for you guys, was basically a bloodbath, right? And over the last 5 days, again, not so good either. It's been a bloodbath, right? That's just been going bad. It's just been going down. Let's look at the NASDAQ 100. Again, I'm invested into VGT, which, is probably way more focused in tech than the NASDAQ or the QQQ. But, you can still use this as kind of like a weather gauge as a barometer, right? So if we look at the last 5 days, they're down even harder than the S&P 500, right? By definitely a whole percentage point. If we look at Bitcoin, Bitcoin has not been doing well either, right? Bitcoin has not been doing well either. And again, I probably can surmise from all these points that we're probably headed for a little more pain. And the reason is because I think the whole tariff thing is going to come back up. I think the whole tariff thing is going to come back up. I mean, we still have earnings going on, so this is also what's contributing to, the market, market sentiment, everything else. But I really think the tariff stuff is going to come back up, and it's going to drop this market even more, right? It's going to drop everything even more. And I'm surprised that more, like, I would think that Bitcoin would actually be going up, but it's not. It's going down, right? I checked this last night, and this was 95,000, and it just dropped even more overnight, which is crazy, right? This is wild that it's going down like this. So what is happening? But you know what's actually doing very well is gold. Gold is actually performing well year to date. It's up almost 11% versus the stock market. The S&P 500's 2% versus the NASDAQ's almost 2%, and versus Bitcoin. Actually, Bitcoin's been going down. They've been going down year to date, and they're down 2.33% year to date. All right. Gold, again, we use this as kind of a barometer, a weather gauge, to kind of see what the market is thinking. A lot of people are flocking to gold. Okay. And that tells me because people invest in gold for a few different reasons. Gold is known as like an inflation hedge, right? It's known as a recession hedge. It's known as a currency devaluation hedge. The US dollar has been, not doing so well over these last couple of days. So I can see why people are flocking to gold. But it is just blowing my mind that they're up year to date almost 11% over the entire stock market and Bitcoin. So that is just interesting. All right, so gold racks up another record high on tariff concerns, spiking ETF holdings. Fourth month gold futures rose to another record high settlement on Monday, with further safe haven demand sparked by concerns over President Trump's tariffs plan, a softer U.S. dollar, which recorded its third straight weekly loss last week, and increased gold safe haven appeal to investors. So again, it seems more and more investors are flocking to gold because they want a safe haven amid all the uncertainty right now. All right. Again, the tariff stuff is coming back up. We don't know what's going to happen in the, geopolitically in the Middle East, or even in between what's happening in Europe between Russia and Ukraine. We don't know what's going to happen with China and Taiwan, or China and the United States. We don't know what's going to happen with Canada and Mexico. There is just so much uncertainty right now, and it's spooking a lot of investors. And I think, honestly, that is why we're seeing the declines that we're seeing in the stock market. All right. So more to be seen. Of course, we have to position ourselves, take a step back. Don't do anything rash like sell at a loss. Instead, what I would suggest a lot of people do is just hold on to cash, have a sizable cash position, and just keep that gunpowder dry and wait for an opportunity to arise, right? So you can jump on it. If we look at the 10-year treasury, which is our weather gauge for mortgage rates and for real estate, we can see that it's actually dropping, which, thank God, it's finally dropping, right? Like it's been elevated for so damn long, and I'm happy to finally see that it's starting to break new lows. So hopefully this thing will keep going lower, because, there's a huge real estate, industry waiting on mortgage rates to come down. So hopefully we'll get to see that. We'll get that reprieve. We see that VNQ has actually been outperforming the stock market, the broader stock market, right? VNQ, which is a real estate index, for REITs, real estate investment trust. They've actually been outperforming the S&P 500 and NASDAQ and Bitcoin, which is funny as hell, right? But I'm glad to see this because, again, my portfolio is heavily invested into REITs, and to see this finally start to recover, I think, I can see the sunrise on the far away. I can see the sunrise. I could see, REITs coming back. So we'll see. But yeah, we had a great, last quarter of the year of 2024. Things were looking great, and then just since December, it's just been going down, and then now we're just on the recovery. So again, a lot of this is attributed to the 10-year, because the 10-year kind of gauges investor sentiment on, you know, future on the future and what, you know, the tariffs, uncertainty, things like that. So this was rising based on all that uncertainty, especially when Trump was transitioning into the White House. So like I said, it's welcome that this is finally starting to go down. So we'll see how this goes. All right. So we're going to finish off here with the real estate sector, and then we're going to move into the portfolio. But before I move into the portfolio review, we'll look at some comments. All right. So anyways, this is welcome news for me. Multifamily REITs to raise rents as construction slows. Okay, this is welcome news. This is great. I actually own equity residential, Avalon Bay, and Mid-America apartments. So I'm interested in this article. REITs remain cautious about economic risk tied to inflation, tariffs, and potential recessionary pressures. Again, aren't we all, right? That's why gold is doing so well. And I think investors are starting to flock to REITs now, right? They're starting to flock to REITs because they're so worried about the broader market. Who knows, you know, but that's just a guess is all I'm saying. So rents will increase, you know, rents are increasing, you know, in certain areas across the nation, which, you know, that's beneficial for REITs because as the rents increase, you know, the basically profits are going to increase for REITs as well, right? Hopefully, if they're, you know, disciplined and they're not spending a bunch of money on CapEx or redevelopments or things like that, and they're being responsible with their balance sheets, then REITs should outperform this year. I think this is going to be a banger year for REITs, right? Especially if you've been holding for as long as I have, which, you know, you guys can see. I mean, I started my portfolio somewhere around here in 2020. So I got to ride the highs and then been in the lows and lows, right? So this is a welcome sign for me, and I'm really excited for this. One other thing, developers pause new apartments, particularly in the Sun Belt. So this was interesting. I also am a part of a project in the Sun Belt in North Carolina, a multifamily, I think it's like 52 units. So again, this was, you know, just nice news to see. But also in Austin, Texas, like I mentioned earlier, I'm a part of a project there. No, not Austin, Houston, excuse me. So multifamily completions in 2025 are expected to fall by nearly 50% nationally. This is good. This is good news if you're an investor in multifamily apartments, because prior to this, right, through, you know, from 2020 to basically now, there was a lot of building, right? There, like, builders were building a lot of apartments. A lot of apartments were coming online, right? When those apartments come online, there's an oversupply, right? There's an oversupply of apartments, which basically means that, man, I got to exit this thing. Hold on. Excuse me, guys. I don't play Steam or anything like that, but I'm just on there. Let me exit Steam. Okay. All right. So anyways, whenever there's an oversupply of apartments, that means, you know, apartment owners, operators, they're battling each other for supremacy, right? They're offering concessions. They're probably lowering their rents, you know, to fill up their buildings, right? And when these buildings eventually all get filled up, right, the market, you know, absorbs the renters. Then, you know, you start getting into like oversaturation, right? You start getting into oversaturation. People are going to start coming. There's not enough apartments now because everything's already been absorbed. So now you start moving into this new phase, right? There's people, and especially with mortgage rates still being high and people not buying homes, you know, again, multifamily apartment buildings are going to benefit from things like this. So this was just nice to see. This was nice to hear and read about, because a lot of my real estate projects have been dealing with a lot of BS, especially with, you know, apartments coming online, you know, different markets, you know, absorbing the population differently and them being absorbed. But if there's no new builds expected for the next couple of years, multifamily apartments are going to spike dramatically. And I'm invested into a couple of different REITs that are multifamily specific. So this is welcome news. This is great news, especially for me, especially in these areas that I'm investing in outside of the stock market. So just wanted to share this again. All this will be down below in the show notes. All right. So we'll finish off the real estate thing, and then we'll get into the portfolio update. Okay, so this is just real quick, especially for those who, you know, want to just, you know, learn something new about real estate. Mueller, Glenn Mueller, if I remember his name correctly, he came out with a ton of research, and one of those pieces of research where Michael market cycle for real estate, right? So there's 4 phases in this market cycle. You have the recovery, the expansion, the hypersupply, and the recession. Okay. We've kind of already went through this here, declining vacancy and new construction. We already went through phase 2, and that was basically 2020 to 2020. I want to say maybe 2022, 2023, right? Because all this new construction was happening. All the apartments were filled up. Everything was great, right? And then we went into hypersupply. They're still building 2022 to 2024. All these new apartments are coming online. All these builds that were happening are completed now. So now apartment operators, they're basically fighting for, occupants. They're fighting for renters. So we were in a hypersupply, but now I think we are moving here. We're in here. Completions came online, right? There's still vacancy, but as those vacancies get filled, as the market absorbs those new builds, and we're not building anything new because, with the threat of tariffs, the cost of lumber and all that stuff goes up. And not only that, but mortgage rates are still pretty high. The 10-year treasury is still pretty high, especially for mortgage rates and commercial real estate. So I think we're going to be moving into phase 1 probably this year or definitely early next year, right? This would be great for the real estate market. So we'll have no new construction. This will be recovery. Right now, over these last couple of years, over these last 2 to 3 years, that would have been the prime time to be buying real estate. Everyone was staying away from real estate because interest rates were so high, and for good reason. But it is when, the real estate market was at peak pessimism, that is when you should have struck. That is when I struck. That is when I was dumping as much cash as I could into REITs and into the real estate market, right? So I was investing into real estate. So now we're on this recovery phase, or eventually moving into this recovery phase. And I definitely think once we hit recovery and expansion, hopefully these real estate projects that I'm invested in will cash out at very, very good valuations for the properties. And I'll be able to bank it, right? As an investor, I'll be able to bank it. So we'll see. But REITs, they're going to move eventually into the recovery phase if we're not already in the recovery phase. And this will be a welcome sign. So I'm going to cover this last piece, and then we'll move it in the portfolio. This was something that came out just a few days ago. Actually, it came out a week ago, excuse me. Bank of America says growth stocks are in a bubble exceeding the .com and Nifty 50 eras, and warns that they could take the S&P 500 down 40%. Joseph Carlson of the Joseph Carlson Show, he covered this already, so I'm just kind of covering it for my channel. But basically, the net of this is that, the S&P 500 has a heavy concentration to tech stocks, to the Magnificent Seven, right? It has, 25-30% exposure just to those 7 stocks. So if, basically what this article is saying that, the exposure to that is very, it's feeling like the .com, or the Nifty 50, right? And if we scroll down, you guys know the .com, right? Basically, the .com bubble burst, 1999, 2000, 2001. Peak, or no, it's right here, internet bubble. Yeah, peak optimism, and then it just blew up. A lot of companies went bankrupt, and the stock market went down, right? So this is the Magnificent Seven. New valuations, et cetera. They're just basically they're driving up the price of the S&P 500. And they also go on to say that, there's so many new investors just investing passively into these index funds, which is also driving the price of the Magnificent Seven up. Okay. And then you have the Nifty 50 bubble back here. So again, the net of this article is they're basically advocating, this is from Bank of America, and I hate Bank of America with a passion. But there is some merit in this article, and they're basically saying that they recommend people invest into an equal weighted index. All right. An equal weighted index of the S&P 500. And we covered on this channel what that index is. And they say that it could be outperforming the S&P 500 in a flat market. Do we know if we're heading into a flat market? No idea. But, that's what they're advocating for. But you guys can see it. Are we in a bubble right now? The Magnificent Seven? Is this time different, right? This is the question we always have to ask ourselves. Is this time different? I don't know. It's definitely reminiscent of an internet bubble, the internet bubble. And again, I didn't live through this period. Well, I was alive during this period, but I wasn't exactly investing, right? Like why wasn't I, right? I think I was like 10 years old. But the Magnificent Seven being this concentrated in the S&P 500, right? You have just 7 companies basically driving the whole stock market up. Are we in a bubble? And is that a risk? And how can we mitigate that risk? So it's going to lean on kind of what you guys think. I mean, personally, my thoughts are, I don't want to say this time is different, but I'm going to say this time is different. Internet bubble, entirely different and entirely different of what happened versus the Magnificent Seven. These are very mature companies that have lived through the .com bubble, right? You have Google, you have Amazon, you have Apple, you have nvda, you have some of the best technology companies, and these companies have been through a lot of crap already. When I say this time is different, we have the advent of robotics, we have AI, we have all this new technology that's coming out. It's no longer just web browsing and search engines, right? And anyone can open up an LLC and start an internet company. Like, that's not what these Magnificent Seven are. These Magnificent Seven are literally the prime innovation of America, the premium innovation of America. So if we're in a bubble, we probably are, but I can't see it being anything relevant, or I can't see it being anything like the internet bubble. Is just what I'm trying to say. So, all right, guys, we talked about a lot. All right. Thanks for hanging in there with me, but we did talk about a lot. We talked a lot about real estate, about the market, about market news, about Palantir, Apple, everything else. So we're going to be moving into the second segment, which is going to be which is going to be a portfolio update, but I'm going to check on the comments here, just to go over a couple things here. Whew. All right. That was a lot. Okay. James, what's up, brother? Hey, welcome back. Let's see. Jeff Welch says that PE ratio. Yeah. When we were talking about Palantir, it was 600 before. It's a wealthy life. Hey man, good to see you. I saw your video on Palantir, man. Appreciate that video. That was a really good video. I dumped mine 2 weeks ago. So Jeff got out of Palantir. Yeah. Look at Bitcoin, dude. Yep. We already looked at Bitcoin. G bro, welcome back. Let's see. Yeah. Doge is doing their job. Yeah, from Wealthy Life. Yeah, Doge is definitely doing their job. I have a few friends, again, like I said, that are still like, government contracting, or even, part of the GS system, which is the government service system. They did all get an email, which was funny as hell. They got an email from their HR department at the Office of Personnel Management, OPM. So they got an email basically saying, we need to know what you're doing for your job. Give us 3 bullet points of what you do for your job. So I thought that was funny as hell. Like, it was an official email too. So that was crazy that they're moving this fast, that Doge is moving this fast. Is it a welcome sign? I think it is. Of course, the people who are getting laid off probably don't think it's a welcome sign, but it is what it is. Let's see. So he rolled it. So Jeff rolled it all into VU, which is the S&P 500. Let's see what else. So It's a Wealthy Life says, I will never sell Apple infinite money printer. That's always good. Yep. Jeff says, glad to see the REITs are going up for you. Yeah, thank God. I've been in red territory for so long, man. It's finally good to see, it's good to see it finally going up, man. That's all I could say. It's a Wealthy Life says Carlson has no clue about AI, dividend, and value. I don't know. I like Joseph Carlson's stuff. I don't know. He's a pretty good analyst in my opinion. Of course, some things he gets wrong, but that's just investing in general. I don't think anyone could be right 100% of the time. That's just, I don't think that's possible, but yeah, I don't know. I enjoy his viewpoints is really what I'm trying to say. It just makes me a better, well-rounded investor, right? If you could take a bunch of viewpoints from everybody, even if you don't agree with their position or agree with what they're investing in, at least you can get a viewpoint. That was exactly what drove me to invest or start investing or start looking at seriously cover call ETF investing or high income investing. I I hated the idea of doing that. And then just, again, watching maybe videos now after a 3-4 year hiatus, I'm like, you know what? It actually does make some sense, you know? So we'll see how that goes. Let's see. It's a Wealthy Life says the Mag 7 have the ultimate moat. Yeah, exactly. I mean, you hit the nail on the head. They have the ultimate moat. Although I don't know for Netflix, to be honest, because Netflix, man, it seems like every other day there's a new streaming service coming out. But I like how Netflix is going to start adding content creators to their lineup. Like they're going to do, you know, professional content creator additions like podcasts and things like that. So I think that's really cool because honestly, this is what I spend most of my time on YouTube with, is just watching, you know, content creators podcast type stuff. So it would be really cool for Netflix to have their own version of that. And really, I think it is a pot shot at YouTube. It's not a pot shot at anybody else. Let's see. Indy Kamen says, I think you're new here. I've never seen your name, so welcome. Will you slowly dollar cost average into cover? Hell no. Hell no. I do. So let me take that back. Full disclosure, I have no holdings in cover call ETFs at this moment. I am going to be having some positions soon, which I will release much later. I did cover it in my last stream, the idea that I was floating. But so much later I will have something. But yeah, cover call ETFs, no, depending on which ones they are. A lot of people dollar cost average or reinvest into yieldmax. I think that's kind of dumb, in my opinion, just based on all the viewpoints I've seen and kind of all the, you know, just everything I've seen about yieldmax, right? There are cover call ETFs I have in my mind that I'm looking at, and I wouldn't dollar cost average, but what I would do is lump sum invest, right? So if I see an opportunity, say I buy a cover call ETF at like $50, and let's say it goes up to $55 and then drops to like $48 or $47. When it drops below 50, that's when I would pile in cash, right? If it dropped to like 47, that's when I would lump sum invest. I wouldn't dollar cost average into cover call ETFs because that's not, I don't know. That's if you're investing as an investor, right? And you're putting your money into these cover call ETFs that are supposed to give you a distribution, a high distribution, and their share price continues to decline, NAV erosion, right? Why would you dollar cost average something like that? Is the question that comes to mind. There's two camps to this. Some people say you should do it. Some people say you shouldn't. I'm in the camp that says you shouldn't do it. I'm not saying you know, dollar cost averaging is a bad thing in cover call ETFs. I'm just saying I wouldn't do it. Depending on the ETF. All right. Hope that answers that. What happens if SMCY gets delisted and you are a bag holding? Well, welcome to being a bag holder. Again, yield max, right? I'm not going to say it. I'm not going to call it, but you guys already know where I'm going with it. A lot of funds are heading in that direction, and they might, you know, for SMCY, what I think they're going to do is probably just do a reverse split. So if they get down to like $5 a share, they're going to reverse split, and, you know, they'll bring it back up to $50, and, you know, they'll send a nice little email out to everyone and say, hey, you know, this is why we had it. It's just for accounting, but then you'll see the dividend gets substantially slashed. In my opinion, is probably what's going to happen. Let's see. It's a Wealthy Life says, I like Carlson, just not for growth. Yeah, no, well, he's a dividend investor, you know, like he's always been a dividend investor, you know, which was funny because then he shifted away from dividend investing into like growth stocks, like tech stocks. And then he got a lot of flack for that. So it's kind of funny that you mentioned that. All right. So anyways, let's move on to the portfolio update, guys. Let me get that logged in here and we'll go over some of the buys. Well, yeah, some of the buys I made and then we'll go from there. All right. Hold on. I get logged out here. So I had a big purchase on Monday. I think it's when it cleared, or was it Friday? I don't know. It was one of those days that it cleared. But yeah, this was probably one of my largest purchases that I ever made. So this has me on edge. Not really, but it does have me on edge. All right, so let's look into this thing. Okay, so invest. Yeah. Okay, so this is the portfolio. Let me make sure you guys can see, because I got some feedback that people can't see the numbers. So I hope you guys can see the numbers. Let me know in the chat if you guys can or can't, or if it's too small or whatever, especially for my phone users. Oh, that's too much. Oh, maybe that might work. No, that's too much. All right, let me back up a little bit. Okay, so the last time you guys saw this portfolio, it was at $208,000. So today it's sitting at $376,000, right? You guys can see this massive spike here. That was pretty much me dumping my 401k, cashing out on my 401k, and then dumping the 401k into this portfolio. I wanted to basically consolidate, but this plays into a bigger strategy. And like I said, I covered this in my last stream. The stream was called I'm buying cover call ETFs or something like that. But yeah, you guys should check that out. I go over exactly what I'm doing and how I plan to implement cover call ETF investing into my portfolio. All right, so if we look here, REITs are actually doing really good. Thank God. But VGT was my biggest purchase, and I'm already down almost $7,000. I was a little pissed. I was like, why? Like, why of all times when I buy something, it just goes down? All right, I sunk $170,000 into this, and I'm already down $6,700. So it was like a total kick to the teeth, right? But this was the largest purchase, guys. This is what changed in the portfolio. And then I also added, like I said, a crypto ETF, and this one is IBIT, the iShares Bitcoin Trust. Okay, and I went with this one over the other ones, and I did another video. I did a video on Bitcoin ETFs. So if you guys want to go to my channel, look a couple videos back, you'll see it. But I basically covered all the Bitcoin ETFs that are worth looking at, in my opinion, and this one was the one I decided to go with. All right. So I just dumped a couple $1,000 in there. I actually cashed out of the Bitcoin I had, the remainder of the Bitcoin I had, which was, it was like $1,800 or something, like $1,600, and moved it to the trust. And the reason why I did that was because I didn't want to have to keep switching between accounts and, this and that, and have to figure out where money should go. I just want everything to be consolidated, right? I like consolidation. I like just looking at one platform for everything. I don't want to have multiple platforms. So I decided to go with IBIT. Another reason why I chose IBIT was because of the expense ratio is extremely low. So I wanted something much lower than that, but this was the lowest one I could find, right? So I decided to go with IBIT. There's other ones out there like Grayscale's GBTC, which is Grayscale's Bitcoin Trust, but their expense ratio is like a percentage point or something. So I intend to hold this over the long term, as long as I possibly can. And what I plan to do is put money into this whenever I get distributions from either cover call ETFs or probably dividends, right? So I'll put a little bit of money into the crypto ETF here and there, but I'm not going to go too heavy into this. All right, I just wanted some crypto exposure for the portfolio. So I hope that makes sense. All right, so there is something else you guys might notice, and I don't want to say it on this stream, but if you guys look, margin is very low for an account that's $376,000. Okay, you guys can come to your own conclusion on what probably happened here, but yes, it is happening, and yes, I will cover it in a different video. Okay, and actually, this I might not even like. The reason why this is so low, I might not make it public, but you guys will see what the outcome is in a much later video, especially when I start going into the cover call ETF stack and margin stacking and et cetera, et cetera. Shout out to Oracle ETF for showing me how to properly stack your margin, et cetera. But yeah, that stuff will all be coming here soon. So that's the latest update. Again, for REITs, like I mentioned, in the apartment REIT sector, they're actually one of my better players. And again, it's because, everyone needs a place to live. And I did mention I had investments in EQR, Equity Residential, MAA, and I thought I saw Avalon Bay Communities as part of that other one. Yeah. So these have all been doing very well. And again, I think they're going to continue doing well coming into 2025 and definitely 2026, because as apartments get absorbed in their local markets, rents are going to continue to rise, I think, and this will be a good, tailwind for real estate, especially if interest rates continue to go down. So I think this is really, really good stuff. So we're pretty much at the top of the hour, guys. I got nothing else for you guys. I got nothing, no new news. Let's see what else we got for the comments. Let's see. Jeff Welch says, I'm glad I'm not the only one that crashes stocks when I buy them. Talking about my VGT play. Yeah. So again, guys, the whole reason why I bought into VGT, if you guys were on the last stream, or if you guys are new or whatever, was because I wanted to have a sizable portion to technology, because I want to take advantage of, you know, tech stocks. I haven't been invested specifically in tech stocks this entire time over the last 8 years that I've been investing. So this is the first time actually investing into a tech specific ETF. So I'm really excited to see where this is going to go. Hopefully not to zero, but I'm really excited to see where this will be in the next couple of years, especially as regulations go down for AI, as you know, new AI innovations come online, new technology comes online, robotics, all that stuff. Excuse me. All that stuff that's going to come online is going to be huge tailwinds for technology. Excuse me, guys. I got to have a quick cup of this coffee, man. I was looking at it this entire stream and I'm like, man, I cannot wait to drink. All right. Excuse me. I am sorry. I shouldn't be doing this on a live stream. But yeah, I'm really excited for the tech. And I bought this specifically, again, because it has a very low maintenance requirement. So one, it's low expense ratio, which is always good. But here, I think it's somewhere over here. Yeah, it has a very low maintenance requirement of 25%, which is a big deal, especially when you want to take margin. Okay, so very big deal. So what else we got? So King of Big Mac. I could always go for a Big Mac. That was with me and the above stock. SMCY got in, and over 2 days, it went down 16%. Oh, yeah, referencing VGT. Yeah, man, SMCY is getting hammered. And, I mean, let's hop back into that. So SMCY is getting hammered too. And again, personally, if I had, and I might, I'm not saying I will, I might hop into SMCY, and I might hop into PLTY. And I'll tell you why. A lot of whys. So SMCI has that big partnership with NVIDIA, right? And I swear that's the only thing propping this company up. If they didn't have that partnership, this company would get delisted, right? This company would get delisted. But I mean, just look over the last couple of days, this thing, maybe not there. There we go. Over the last month, it's been doing well, right? 124% from its all-time lows. This was his all-time lows. Now it started to trend backward, but you know, I think this is more of an attributed just to the broader market going down. I don't know if this company is going to go back up to its all-time highs, you know, back up to $118. I mean, it's still a pretty steep discount and it's still got a ways to go, but its partnership with NVIDIA shouldn't be discounted. I think SMCY with that partnership will keep it propped up. And I think it'll continue going up. And that is why I would probably go with SMCY to get that single stock exposure and make income off of it. So I wouldn't hold SMCY or SMCI, the stock, the single stock for the company. I would rather choose to go with SMCY. All right. It would be, you know, a quick in and out type of thing. It'd be like a bank robbery. You just go in, get your money, get your dividends. Hopefully this thing will grow, you know, for, you know, at least a couple basis points up, maybe even double, right? Maybe this gets up to $60 and then I would cash out, right? I would cash out. I made my distribution income. I would cash out, take the capital gains, and then I would roll that into something else, or I would split that earnings up and then, you know, across, you know, VGT, REITs, crypto, or whatever else, or, you know, pay off some margin. I don't know. Right. But that is how I'm looking at a lot of these yield max funds. These are not buy and hold forever funds. These are momentum players. These are swing trades. Okay. So that's why I'm looking at SMCY, and plty or Palantir's, income strategy ETF, right? So I would just use these as strict momentum players. I mean, look at the distribution rates, ridiculous, right? But again, I don't have a crystal ball. Nobody does. So who knows what's going to happen with these two funds, right? Who knows what's going to happen with Palantir or the broader market? So this is why you got to kind of position yourself to take advantage, find a price point that you're comfortable with, you know, and then jump right in. Okay, let's see. Let's see. Oh, Eugene for Harmony. Can you explain how M1 Pi rebalanced? I mean, daily or weekly. Let me touch on M1 rebalancing. Yeah, King of Big Mac. Yeah, I listen to Oracle. I like his stuff, honestly, and I contribute a lot of I'll say the reason why I'm even hopping into cover call ETFs is because of Oracle. I will put that out there. Now, the person that got me started on this was Pay Me in Dividends. Check out his channel. He has a lot of good stuff too. But he was the one who really like started me off with cover call ETF investing. I really liked the way he explained it. And then just by happen chance, I came across Oracle and I went full, I just went way off into the deep end, way off into the dark side. Like if you guys are Star Wars fans, you guys remember that scene where, you know, Anakin Skywalker is about to kill Palpatine, you know, and then like Palpatine convinces him like, no, don't do it. And then he ends up killing Mace Windu or whatever. Like that was essentially me. Like now I believe in the dark side, right? Like I want to learn this power, right? This cover call ETF income power. But anyways, let me digress for a bit. So M1 rebalancing, you should never rebalance unless you want to take a capital gains event, right? So I have not rebalanced in a very long time. And the reason is because the REIT market has been so bad, right? I rebalanced probably in December 2021, right before the drop. That was the only time I rebalanced this portfolio, but I have allocation percentages. I hope you guys can see this. Yeah, I have certain allocations, right? Like Cell Towers has a 21% to the portfolio. Apartment REITs has 16%, 18% for industrial storage, and it's 14, right? So I took a market cap weighting approach, but to rebalance this portfolio, it's going to sell a lot of the overperformers, right? And buy the underperformers. When you do that, it creates a capital gains event. So you got to be careful with that. You should only do it maybe once a year if you want to be disciplined about it, you know, or whenever you feel comfortable with it. I don't want to rebalance right now because we've been in such a bad bear market for the REITs, for real estate. But as valuations can, you know, as share price increases, valuations go up, everything returns, you know, to normal, everything gets better, I will rebalance then. I probably should have rebalanced when REITs were like breaking new highs, right? Like way back in, I think like November timeframe. Yeah. Like right around here is, no, not December. What am I doing over here? Let's do 1 year. I should have rebalanced like right around here in November. That is really when I should have rebalanced, because this portfolio, the REIT portfolio, was at like 230, 240 or something. Like it was looking frothy. I was really happy about it. I was like, yes, my thesis is playing out, like finally getting out of the bear market. And then we went right back into bear market. Like, you know, I should have rebalanced then. I didn't. So maybe this next time I definitely will. But hope that answers that extremely well. Let's see. It's a Wealthy Life says, just buy Tesla. You know you want to. No, I will not buy Tesla, but I will buy the cover call ETF version of Tesla, not TSLY. I will stay away from TSLY. James Max says, great portfolio setup. Thanks, man. Appreciate you. King of Big Mac, SMCI is the underlier. Yep. That's why I'm scared. Yeah. I don't think SMCI is going to get delisted. I hope it does, because I freaking like that company has caused, like they do so much fraudulent stuff. Like they should not, let's see, the second time they get delisted, but they got kicked off the NASDAQ 100. So they've been delisted before, right? And then they fired a bunch of the people that caused it. And then as soon as they got relisted, they rehired all the people that caused them to get delisted. This is why, and this is all from Hindenburg Research. And I'm so sad to hear that Hindenburg Research is going away. But Hindenburg Research really exposed them as a fraudulent company. And this is why I do not trust SMCI at all. But, you know, hey, if you can make some money off them, why not? Let's see. Eugene for Army says, can you explain the separate video about margin, what the 25% margin means? Yeah, I plan to do a whole video series on margin, on cover call investing and all this stuff. It's gonna be baller. But again, I just got to find the time to actually sit down and record all this stuff because I have so much stuff to cover, like a lot of stuff. Let me see if I can give you guys a quick preview. Hold on a second. I'm just going to give you guys a quick, just a small preview of what I'm going to be covering. Yeah, I think I can use this one. This one will kind of show it well enough. So this is what I'm going to be doing a video series on. There's multiple slides like this, but this is basically what I'm doing, right? You guys can see it right here. This is an S&P 500 ETF or broad market ETF. I went with a sector specific ETF, VGT. And I'm going to be covering, cover call ETF stack, how to implement it. And again, this is none of as far as the cover call ETF stack is concerned and margin stack and all that stuff, that's not my original IP, my original idea, intellectual property. That's not mine. A lot of that stuff was coined by Oracle, Oracle ETF. Check out his channel. But yeah, a lot of that stuff was coined by him. I'm just the one that's kind of making it look pretty, right? So you can follow it and understand it because I'm a visual person. And so I had to look at a lot of his videos and just take a lot of notes and make pictures so it makes sense to me and hopefully it makes sense to my audience. But yeah, I will explain all of this stuff when the time is right. So you guys will get a lot of value for that. And again, this will all be on YouTube for free. It'll probably be all in a playlist that you guys can binge watch. All right. Let's see. King of Big Mac, same man. I'll have to check him out. I like Scott's PC as well. Started off like how I am right now. My portfolio was $1,000, but because smcy, I am at 866. Dude, I'm sorry to hear that, man. I really am. I always recommend people follow this approach. And again, there's different thoughts here. I would recommend people start off with like an ETF, right? Something very simple, something that they can dollar cost average into, something that will grow over time. Like, it's going to grow up into the right. There's no guessing here. It's going to do that. You might have short-term volatility, but over the long term, you're going to make out well. Like if we look at, we'll look at VGT, right? If we look at the max, it always trends up into the right. Yeah, you might have a bear market here. You might have some, some short-term volatility, 3 to 6 months or 2 to 3 years, but it's always going to trend up into the right, right? This was CV19 and it trended up into the right, right? You could do this with almost any ETF, not any ETF, any broad market ETF, right? Here's the S&P 500, same exact thing, right? It always trends up. This is considered the lost decade right here. Will we have another one of these where from 2000 all the way to 2008, there was virtually no gains, right? No real gains of any kind. And then we hit into a depression. And then, this is where we're at today. I would always recommend, like I said, just going with a broad market ETF. And then you could do a core satellite approach that you guys can see that I sort of do. This is basically it right here. You will have your core holdings, right? For a long time, it was just the REITs. But then I implemented the VGT. But you can have your core satellite approach. So these would be the cores, and then you'll have your smaller positions, right? Your cover call ETFs, your more riskier plays, things like that. You can approach it that way, but again, it's entirely up to you. I would not, especially if you're a small time investor and you're just starting to build up, I would not just hop into cover call ETFs. I don't care who says you should. I don't care what their reasoning is. Just the side of being a prudent investor, I think you should always go with a solid ETF, build it up to a certain cash level, and then you can start exploring all these different avenues, right? Cover call investing, thematic investing, dividend investing, right? You can start exploring all that crap. But in the very beginning, if you were a net worth of $1,000, that's your net worth, then you really should be starting with an index. And then you can always take out margin later to really, get some extra gunpowder to get some extra buying power. But again, margin has a lot of inherent risk and you've got to be careful, right? If you had a yield max fund, let's say SMCY, right? And you had $1,000 and you're like, you get this bright idea. Let me increase my buying power. Let me, take out margin, and you take out margin against SMCY. If SMCY, your original holding, drops even a little bit, you're going to get margin called and you're going to have to sell shares, right? And it's not a good time. So do the smart thing, find something with a low maintenance requirement, that I covered. And G-Bro, this is for you, or Eugene, this is for you, or whoever asked that. You go with a very low maintenance requirement item, or ETF, excuse me, like an S&P 500, like a VGT. You go with something with 25% maintenance requirement, because then you get so much buffer, meaning that it would have to drop a substantial amount for you to get margin called. Whereas the higher this is, the less room for error there is, right? The higher that is, the less room for error, meaning that if it drops a little bit, you can end up you can actually amplify your losses. So you got to be very careful here. I hope that answered that extremely well. Let's see. It's a wealthy life. Real men just buy and hold diamond hand Tesla. Man, wealthy life. You need to stop that. Senpai, strategies over spreadsheets. I definitely agree. I definitely agree indeed. All right, guys, that'll do it for this stream. All right, I covered enough. I talked my butt off for a very long time. I was probably boring for about a half hour worth of the stream. So anyways, I hope you guys really enjoyed the stream. I hope you guys got a lot of value. I will see you guys in the next stream. All right, make sure you hit that like button, and you guys have a great night. All right, great rest of your night wherever you are in the world. All right, take care.